I think there's only one thing that really matters when it comes to the investment proposition relative to the Federal Reserve. Do you believe them or not? Yeah. And it seems like on days when we're in the green, it's a day not to believe the Fed. And days when we're in the red, we believe the Fed. So give us some guidance about whether or not to believe these guys when they say they're going to do what they say they're going to do.
I think you got to believe the Fed. I think, in particular, after the chair's very effective speech at JH, the message I got is very clear. Failure is not an option to Jay Powell. So I think the uncertainty is how high will rates have to go and how long will they have to stay there to bring inflation down into the twos. But you got to believe the Fed now. I think they've made that very clear. And I've been surprised how unified the messaging is among other members of the committee on this point. So you got to believe the Fed.
My understanding is they're not really coordinating this. They're just sort of speaking from the same book here when it comes to, I always said, like, you wake up in the morning and if you're a central banker, you hate inflation. You may be a dove or a hawk, but you're against inflation. Yeah. Let me turn to another question, because on the one hand, the Fed says they're data dependent. On the other hand, we hear these numbers like 4%, and they're kind of guiding us to this number. Is this data dependent, or are they going to 4% come hell or high water?
Well, I think they're going to 4% hell or high water, if I had to put it into two boxes. They are data dependent, but that's why they're going to 4%, Steve. Inflation is way too high. Inflation was way too high last year. The Fed had a lot of company, and I was part of it in getting the inflation forecast wrong. But job one, and really I think of the Fed right now, until inflation comes down a lot, the Fed's really a single mandate central bank. The chair made clear the Fed knows that if you squander price stability, it's very hard to achieve and sustain maximum employment. So I think that they are data dependent, and the data's inflation's too high, so I think they're going at least to 4%.
You already squandered it. That's the problem.
Okay, well, we can agree to disagree on that.
No, but that's the thing that gets me. It's almost like we're in the soup now. We're in this mess. Yeah. So I guess there's no reason to talk about how we got in the mess. But it's just unfortunate that we need to do things that are counterintuitive or counterproductive. We need to raise unemployment. We need to slow the economy. We need to cut off this a great recovery. We need to make borrowing costs higher for entrepreneurs and people that are trying to build businesses that hire people. We're in this mess of cutting off our nose because of, for some reason, and the answer that we're giving, what's that got to do with Putin's price hike? What's that got to do with inflation that's all around the place caused by other things? Yeah. So our people here in this country got to take it on the chin to lower inflation. It's not a great way to do business.
Well, no,
Rich.
Joe, and I think if it were just Putin and it were just energy, I think your point would be 100% correct. The problem is that the shock that the economy took globally with the shutdown and the pandemic and the reopening was an enormous shock. It was almost like a war-like shock. So there's been a lot of dislocation, and unfortunately a piece of that is the economy got out of balance last year, in part because of policy and in part because of other measures. And I think Chair Powell is correct that over the long haul, you can't prosper in the economy, as we saw in the 70s. You and I remember the 70s, with high and variable inflation. So I agree, it's not a great place to be in. If it were just Putin, you would be right. But unfortunately, the economy is out of balance now, and the Fed needs to bring demand back in supply.
Interest rates seem too low, and you can't have people taking risks because you can't spawn stupid decisions by keeping rates too low. So I see how we need to get back to a more normal level. Sure. But I think the Fed, would you agree that the Fed enabled fiscal policy to run amok?
Well, what I'll say about that, because I was obviously as vice chair during 2021, as I said, 22 million jobs were lost in the spring of 2020, 30% decline in GDP. The Fed was all in. I have no apologies for that. I think given the shock, the Fed needed to be all in. I was not unhappy when the CARES Act passed at the end of March, which was $2.5 trillion. I think what you can say is that as we went through 2021, it became clear, maybe sooner to others than to others, that demand, in part supported by that policy, was out of balance with supply.